guys, we're going to be talking Tesla on the smartboard next. Tune in.
You think you're gonna spray me?
Yeah.
Don't spray my camera! Let me see your muscles. Whoa, you got big muscles. Just got home from CNBC. I'm gonna take you guys through the Tesla trade that we just did. I was talking to Dr. J about it. So the Tesla trade in the 2017 stock draft. So I closed my near-dated call, the covered call. I rolled it out to July. So I'll show you what that chart looks like. I made a call for 600 in Tesla longer term. I'll show you what that looks like. But first, I'm going to play with the monkeys for a second. Come here, you.
It's cold! All and not break, ones that are polarized, ones that I could throw on my head and not get caught in my hair. So I went with these Oakleys. They're men's. They told me everything is unisex.
What did you say about sex?
Anyway.
So let me know in the comments below if you like Trisha's glasses or not. Are they too manly or are they okay for women? Thumbs up. If you like them, and if you don't like them, just write a comment below. Don't do thumbs down, because that just makes you an internet troll, and we know there's plenty of those around here. You guys aren't internet trolls. So here's Tesla, and okay, Tesla longer term weekly. Here's what I'm seeing. This is a wild chart. I know I've done the free video on this twice in a row, but it's super fun. So this is the weekly. This is a log scale. Really, really important to enable log scale when doing longer term analysis that sees the stock go from 20 bucks to 340 bucks. So from an Elliott Wave point of view, I see this as up in 1, nice sideways 2, beautiful 5-wave subdivision in orange 3. And then here's where things I think got really interesting. There was a sideways wave 4 between 292 and 141 in Tesla ever since, the range actually began in 2013. We just broke out mid-2017, first quarter of 2017. So you're talking 1, 2, 3. You're talking almost 4 years of a range. That range, guys, in Tesla was 107%. And these are the talking points that I had ready for CNBC, so they're on my mind. 107% range from 141 to 292. We broke out from 292, and if you project another 107% move, which is very common, a lot of times when markets break from consolidations or a triangle, often the widest part of that consolidation serves as an upside target. So you tack on a 107% move to 292 breakout. I think that was a $312 move that projects 605 in Tesla. That's going to be longer term, right? So as I kind of zoom in here, on the way to that higher degree wave 5, I have blue 1, blue 2, and blue 3. Let me get off this weekly, get onto the daily, and give you a closer view. So here's blue 3. And one of the reasons I was talking to Dr. J about this right after my hit on Powerlunch, was just kind of showing him how I was doing diagonals with a leap, with a longer term call, and just explaining to him. So if you're Dr. J, if you're watching, let me know what you think. So if we do ratio analysis 3v1, little concerned that we're up against this 100% relationship of wave 1 up in wave 3. Okay, so the percent change is whatever that percent change is on this move right here is going to be exactly equal to the percent move right there. That's at 340. So I'm a little concerned we're up against resistance for that reason, number one. And number two, the other reason is we could be coming up towards the end of a third wave here, drop back in wave 4. So for that reason, what I did today in my Tesla for the longer term, or for the CNBC stock draft, is I'm still holding the January 2018 250 call. That was a Delta 80 call at the time. Okay, so then what I did is I had the 340 call that I initiated at the time. That was the June 2017 340 call. I sold that. That corresponded to that 100% Fibonacci projection I just showed you. I lost money on that one. Okay, that was the P&L today. So what I did then is resold the 370 call a little bit higher out in July, which is going to guard against what I think to be this pending wave 3 top, then a pullback in wave 4. Okay? So as we go from the daily to the even smaller time frame, your wave 3, of course, needs to break down into 5 smaller waves. And if we let motive wave do the work for us, decompose wave 1, 2, up in 3, down in 4, then up in 5. So in the near term, we might need to hedge Tesla. And for that reason, I sold the 370 call, pull back there in wave 4, eventually breaks us up through 400 for good. The other trade that I put on today with customers is those financials are weak. We did get long the bonds with customers, but we did also move in Goldman. Goldman Sachs, I think, broke down from a nice 5-wave push in A, beautiful 5-wave triangle there in B, and we're going to need another 5-wave move down in C. So we decompose that as an impulse. It'll take some kind of shape like that, move down into some fib support. Minimum would be a 206 to 200. Ideal would be 195. So that's the reason with the customers today we put on in Goldman the start of a short position. We put on a 210, 205 put spread in the June monthlies, okay? So I think bonds are moving up. Financials have been underperforming. Regional banks really were under pressure today along with energy. So Goldman and a couple other shorts are going to get a start to explore on the downside. But Tesla continues to just be on its own. All right, guys, we'll leave it there. Thanks for watching. Be sure to hit thumbs up, throw a comment, question, insult, if you must below. And we'll catch you guys in the next video update.